the best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Asia is once again at the center of the global investment story, and in 2024, foreign capital has been pouring in across key markets despite ongoing geopolitical and economic uncertainties. From green bonds in Malaysia to AI labs in Singapore and crypto ETFs in Hong Kong, the region is seeing strong momentum across finance, tech, and sustainability. According to the Asia Financial Snapshot 2024 by Carma, foreign investment and sustainability were the two most prominent media themes across 6 key markets, highlighting a region actively redefining how and where global capital is being deployed. But what's driving this renewed wave of interest? Are sustainability narratives genuinely reshaping investor priorities? And as AI and digital assets gain traction, which markets are setting the pace and which are playing catch-up? Well, to find out more, joining me now is Sabrina Azmi, who is the Research Solutions Director at Carma. Sabrina, welcome to the show.
Hi Hongbin. Thanks for having me.
Thank you so much for joining us. Well, Sabrina, foreign investment dominated editorial coverage across all 6 markets in 2024. What are the core drivers behind the sustained interest in Asia?
So, just a bit of context. We did this Asia Financial Snapshot report to study some of the key themes that are being reported by traditional media on different financial news across different Asian markets. So, and you're absolutely right. Foreign investment is dominating editorial coverage across the 6 markets that we studied in 2024. And the main drivers are what we saw in the report: robust economic fundamentals, ongoing regional integration, and policy-driven initiatives that are attracting capital. And across all the 14,000 media articles we looked, what we found was that media coverage was consistently highlighting themes of capital inflows, regulatory transparency, and investor confidence, themes that are central to Asia's investment appeal. I think we all know geopolitical situation globally is not stable, so they are really nudging global capital towards diversified markets. And Asia is really at the forefront of that and is being one of the prime beneficiaries of this shift as well.
Right. Well, do you see this foreign capital as opportunistic or strategic? What signals are we getting from global investors?
I think definitely lots of global investors are behaving strategically. The tone of media coverage that we've seen and the nature of investments indicates strategic long-term intent. Investors aren't just chasing yield, they are aligning with national priorities such as clean energy, AI infrastructure, fintech innovation, and a lot of our articles highlighted sustained investor confidence tied to long-term themes like sustainability and digital transformation. And it's very clear from the media that most of this capital is strategic, so it's not just short-term bet. Look at Japan, for example. Foreign investors are not just buying stocks, they're also committing to infrastructure like the country's first climate transition bond and high-performance AI computing through deals with organizations like SoftBank, NVIDIA, supercomputer, and so on. Mm-hmm. And in Singapore, for example, the creation of infrastructure funds and sustainable REITs, often backed by institutions like Temasek and global partners like ICBC, shows and demonstrates a lot of confidence in Singapore's role as a safe and also forward-looking investment hub. So what we're seeing here is that investors want to be part of Asia's long game. They are very strategic about the way that they are dealing with investments in the region as well.
Right. Well, Singapore attracted major partnerships and capital flows due to regulatory stability. How much of Asia's investment success hinges on strong regulatory frameworks here, Sabrina?
I think it's hard to overstate the importance of regulatory credibility. It's arguably the foundation of investor confidence. When we think about financial communications, a lot of the time we are trying to communicate this trust and confidence. So when investors commit significant capital, they are not just betting on returns, but they're also betting on things like governance, transparency, and predictability. A standout example is obviously Singapore, where our regulatory environment is one of the most stable and transparent in the world. And that's why global players continue to base their regional strategies here as well. I think a key coverage that we've picked up in our report is the 500 million decarbonization fund that was launched last year and backed by government support with institutions like Temasek. So this wouldn't be possible without that confidence in oversight in delivery. I mean, other markets are learning from this as well. We can see in Hong Kong's move to create AI and crypto regulatory frameworks has also helped to improve its investment appeal.
Right. Well, speaking of other regional countries here, how have policy reforms in countries like Malaysia and Indonesia reshaped investor confidence this year?
Yeah, I think both countries have made significant progress, and we've seen that in the positive coverage on our report as well. The media has captured a very noticeable shift in sentiment. In Malaysia, for example, regulatory reforms have helped to spur a surge in IPO activity and renewed investor interest. I think the government has focused on ESG compliant financial market access and creating a strong base for things like semiconductor and data center growth. So these moves are seen as part of a broader effort to position Malaysia as potentially the next generation trade and tech hub. And this response has been overwhelmingly positive, especially on the media. I think Indonesia, on the other hand, has made some headlines trying to shed its long-standing Fragile Five label. And it's now, so programs like its Golden Visa program and the revision of job creation law has sent a very clear signal that it wants to be open for business. So, and this is, coupled with very strong demand for EV investments and solar exports. So the country has really emerged as a magnet for green capital as well as tech-driven investments.
Well, sustainability was also a dominant media narrative across Malaysia, Singapore, and the Philippines. Is ESG now a must-have for attracting foreign investment in Asia then, Sabrina?
Sustainability was one of the key themes that were popping up on our report, and it has now evolved from a nice-to-have to a must-have. ESG has crossed the threshold from trend to somewhat of a baseline requirement. So what we're seeing is that investors, particularly institutional ones, now view ESG performance as a reflection of business resilience and risk management. I think sustainability ESG themes were frequently covered in our report, and it shows a clear shift in how financial media across Asia also frames capital flows and policy. ESG considerations no longer add-ons. They are now integral to how investment strategies are evaluated. So we can see that in Singapore, for example, as I mentioned earlier, the 500 million support to decarbonization across Asia. In Malaysia, we're looking at green finance and sustainability compliance taking forefront, as well as more coverage on ESG mandates and carbon pricing initiatives. And in Indonesia, they're really leaning heavily into clean energy headlines and strong coverage on electric vehicle policies as well.
Right. How have green bonds, REITs, and decarbonization pledges, such as Singapore's $500 million commitment, influence investor sentiment?
I think it's definitely played a very significant role in building investor trust, signaling long-term commitment. I mean, these instruments have had a direct and powerful impact on market sentiment, especially because they represent more than just intent, right? They involve real capital, very clear timelines, and measurable outcomes as well. In Singapore, green REITs backed by Temasek affiliated entities are covered as market signals of confidence in sustainable finance, like the 500 million pledge towards decarbonization. And it has also put Singapore in a very ambitious and leadership position in regional ESG financing as well. In other markets like Japan, the scale of climate transition bonds and its focus on financing carbon neutrality by 2050 has also shaped a very strong narrative around their country's relevance in sustainable finance. So we can see that it's evolving a lot and playing a very clear role in ESG and sustainable financing within the region.
Right. And other than sustainability here, it looks like Singapore and Hong Kong are positioned as AI and crypto hubs. What's fueling their leadership in these technologies?
I've really loved the way that AI findings and insights have stood out in the report. And a few things that are really driving Singapore and Hong Kong's leadership in these technologies include policy clarity, regulatory innovation, and institutional alignment. So in Singapore, we've seen financial institutions like Prudential, DBS, OCBC launching AI labs and integrate machine learning across their customer journeys. So these are not just, side projects where they're testing out AI efficiencies, but it's also core to how future banking and insurance is being built. So these initiatives were also unveiled at the Singapore FinTech Festival, such as tokenized deposits and blockchain pilots. And this really positioned Singapore especially as a very regulated sandbox for digital finance innovation. And Hong Kong, on the other hand, has also made very bold moves by approving multiple crypto exchanges, launching Bitcoins, ETFs, and this has transformed its image from somewhat of a cautious regulator to pro-innovation hub. So especially in the eyes of the fintech world. So both markets are really winning. They are showing that they are committed to building infrastructure and applying legal frameworks that give innovators the room to grow, but also within a very trusted, regulated environment as well.
Okay, and media coverage suggests AI is more about operational efficiency than transformation. Is that holding back broader adoption or investment, though?
It's honestly one of the more subtle and important takeaways from the report. In most markets, and I think this is also maybe not limited to just the finance sector, but AI is still being framed as more of a productivity tool and not really a game changer. So the coverage that we've seen often focuses on things like fraud detection, customer service bots, or automation, which are still very valuable, but they are not, say, transformative in the grander scheme of things. So this framing may potentially limit how aggressively businesses and investors embrace truly disruptive AI use cases. AI can still be included in things like predictive modeling for climate risk, or maybe AI-powered underwriting in insurance. So there are still some areas where we've yet to see strong growth and use of AI. That said, governments are taking steps to shift the narrative. We've seen this in places like Japan, where their financial services agency have released AI ethics guidelines. Hong Kong has also launched sector-specific AI governance frameworks. So this could signal a readiness to move beyond safe use of AI and to look at more ambitious territory as well. So I think the next phase will really depend on whether businesses and policymakers can help to reframe AI as a driver of innovation and growth, not just looking at efficiency.
Right. Well, Hong Kong's approval of spot Bitcoin ETFs and Singapore's FinTech Festival Crypto Pilot suggests a shift in digital asset regulation as well. How are these cities managing innovation with compliance?
I think both Hong Kong and Singapore are offering a roadmap for how to balance financial innovation with regulatory credibility. And this was very clearly reflected in our media coverage as well. In Hong Kong, the approval of multiple spot Bitcoin ETFs and expansion of crypto exchange licenses were not just isolated decisions. They came hand in hand with a push for investor protection, tighter compliance, and clearer definitions around digital assets. I think the message to the market was that crypto can grow in Hong Kong, but it will be held to a professional standard. And this was a deliberate move to sort of reclaim relevance to Web3 and blockchain finance hub, especially in the wake of stricter crypto crackdowns in China and volatility elsewhere. Singapore, on the other hand, the 2024 FinTech Festival served as a very strong platform for piloting tokenized deposits, blockchain-backed financial infrastructure. And this was all under the guidance of MAS. So the experiments were not just hype-driven, but they were also very deeply embedded in compliance frameworks aimed at proving that digital assets can be safe, scalable, and central bank friendly. Right. So I think both cities, what they're doing is adopting a model of crypto that is, I guess you might call it regulated innovation. So they're creating sandbox environments that allow testing and learning, but also within frameworks that protect consumers and reduce systemic risk.
And Japan and the Philippines, they've also issued new AI governance guidelines. Are we seeing an Asia-wide push for ethical AI in finance as well?
Yeah, definitely. I think what's emerging is a regional pivot towards responsible AI, particularly in finance. And this is, we've seen a lot of it in Asia, but it's also globally as well. So 2024 saw the beginning of more structured conversations around this. As I mentioned earlier, in Japan, the Financial Services Agency has released guidelines to promote ethical and transparent AI use within financial institutions. And this covers anything from data fairness and auditability to consumer protection. So this signals that Japan wants to lead in AI, not just technologically, but ethically as well. And this was part of a broader narrative positioning the market as a safe and long-term investment hub, particularly as it builds national infrastructure like the SoftBank NVIDIA AI supercomputer that I mentioned earlier. So Philippines, on the other hand, have agencies that back the creation of interagency task force to regulate AI in fintech and BPO sectors. And I think this is especially important given the pressures that AI is facing on traditional call center jobs. And the move was framed in the media as a way to ensure that digital transformation doesn't also come at the cost of workers or consumers' trust. So I think that's an important narrative there as well.
Right.
So I think these developments are not isolated. And if we zoom out, we're seeing an Asia-wide effort to formalize AI governance, particularly in sectors where trust, transparency, and fairness are so important, like finance, insurance, and payments, and so on.
Definitely. And before we let you go here, Sabrina, anything else from your report you'd like to highlight?
There's a very strong rise in strategic media visibility in financial hubs. So I think one of the more key findings was that cities like Singapore, Hong Kong, Manila, and the Philippines, they are not just competing economically, but also competing for narrative dominance. The media spotlight on Singapore's bilateral visits, Hong Kong's crypto announcements, Philippines' climate leadership, these all help to shape public and investor perception of these markets as forward-looking and relevant. So, sometimes it's not about who says what the most, but who is saying the thing that is most important at that point. So strategic media engagement, strategic media visibility is also something that communicators in the financial industry can take away very clearly from our report.
Definitely. Well, thank you so much, Sabrina, for joining me today.
Thank you. Thanks so much, Hongbin.
Thank you. That was Sabrina Azmi, who is the Research Solutions Director at Carma. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.